All right. So this really seems to come down to some wording in those initial documents when it came to the bonds issued in September, May. Oracle said they may need to go back to the markets. These people that are filing the suit, they feel like, well, you already decided that. You already knew you were going to do that, and they were misled. Which side do you fall on?
I don't think the bondholders have much of a case because in any kind of debt raise, you have to be careful when you write debt covenants. And debt covenants are expressly for the reason to protect current bondholders from adding more debt to the balance sheet. And so as far as Oracle's relationship with OpenAI, there's no surprise that they're in bed together and they're going to continue a very aggressive capital expenditure program. And so maybe these bondholders are, crying in their beer, but I don't know if they have much of a case.
All right. I want to be clear. Oracle has not commented so far. I know we reached out to them, and lawyers for the bondholders so far haven't reached out. So we haven't heard the full story from both sides beyond this suit. I want to go to the bonds themselves. Obviously, spike in yields, the spreads and everything else. But generally, how do you view these bonds? We talk a lot about debt financing, but with some room to step back and take a breath, how are you viewing them?
Well, the way I look at these bonds, first of all, Oracle until recently was a big free cash flow generator. Now they are over their skis because the bulk of their revenue backlog comes from OpenAI, and OpenAI has plans to spend $1.4 trillion between now and 2030, and yet the company makes no money. It'll be incumbent upon OpenAI to do either a big private equity raise, rumored, or in fact, a very successful and large IPO later in 2026. With the equity at that point on OpenAI's balance sheet, folks, including Oracle and their bondholders, should have more confidence. But I don't necessarily worry about OpenAI and Oracle as much, particularly Oracle, because it can still probably borrow fairly easily. I do think that this controversy will blow over.
Well, in all fairness, the bonds are borrowing, but you're saying borrowing and take out a credit facility. What kind of borrowing are you talking about?
I'm talking about incremental borrowing because the plan for OpenAI is to continue to aggressively build data centers, and the plan reaches out, Frank, until 2030.
All right. I think most people see it this way, and let me know if you feel this way, that Oracle has become a proxy in the public markets for OpenAI. And when people have questions about OpenAI and how feasible the plans are, they basically take it out on Oracle, and that's why we've seen the stock decline. If, like you said, if OpenAI does a big private equity raise or there's something else that improves confidence in OpenAI, does that dramatically, I know you said the bondholders should have more confidence, does that dramatically turn around the fortunes of these bonds, but maybe more importantly of the equity itself?
Yes, I think so. I think that is the key. And then the other thing that'll happen is over time, Frank, Oracle will continue to diversify, most likely, its revenue backlog. So people will be less and less freaked out about the OpenAI exposure.
We're talking a lot about.
We'll see what happens.
Yeah, we're definitely going to see what happens, Paul. Really quick, because we got to get going in just a second. A lot of questions about these bonds from Oracle. Are there other corporate bonds from other tech companies that investors should look at where the setup is maybe a bit more positive?
One of the stocks that I cover is CoreWeave, and CoreWeave is put in the same camp as Oracle. They do have 35% of their revenue backlog with OpenAI, but diversifying rapidly. And not only the equity, but the bonds have traded at a pretty big discount, and that might be your better opportunity.